Good morning. I'm Carla Jones, Chief Financial and Administrative Officer at the Community Foundation. I have with me here again Elizabeth Monticelli, one of our investment consultants with Mercer Investment Consulting. Welcome.
Great, thanks. Glad to be here. We just had our investment committee meeting.
We did. We meet quarterly on site here with our investment committee to kind of review things and look ahead to see what's up and coming. So we spent some time reviewing March returns. Do you want to tell us a little bit about those?
Sure, it was a very volatile quarter, the first quarter of the 2025, but the portfolios all held up pretty well. So they are diversified portfolios. While U.S. equities were down and struggled, the international equities did very well, and the fixed income part of the portfolios held up very well, and the hedge funds and privates all held up. So overall, for the first quarter, we had positive returns, just slightly above zero for all three portfolios. So very good, and we're still looking at some good trailing one-year returns for the portfolio.
That's great. That's great. Now we know April.
Right. We did do an analysis, a quick estimate for April. And again, markets fell at the beginning of April, but then the S&P really came back towards the end of April. So again, the long-term growth portfolio, we're estimating slightly positive 0.5% for April. So all good news, nothing terrible, just hanging in there and holding up well.
And we have this conversation often, especially here at the Community Foundation, but our portfolios are really built for perpetuity. These are long-term charitable funds that we're going to hold and have invested for a long time. So when we think about that, we know that drives our decision-making process. We are not tactical in our decision process. We are very strategic in the asset allocation and the decisions we make in the portfolio. But you also provided some research about history and kind of the long-term nature of the investments that we have.
Right. So at times where we have a lot of volatility, we go back to our clients and remind them, but they already all know that we do have these times where we have 10 percentage point drops in the S&P 500 from time to time. But like you just said, the foundation, the long-term growth portfolio has a long-term time horizon. So the committee discusses it, but we are not making these short changes and dynamically changing the portfolio allocation. But we did go back over all the years of the S&P 500 and how it has dropped 10 percentage points or more in any one year. But typically it has recovered. Where it struggles the most is if we enter a recession. It takes a little bit longer to come out of it, but over the long term, we recommend that clients remain invested at their long-term policy allocation.
Yes, this chart was very interesting to me to see how the market does return even when it does have a drawdown in most cases. So, and then you also analyze staying invested.
Right.
And what does that mean?
So we want our clients to remain invested in the markets. We do go at times of volatility. I'll take a step back. We do recommend all of our clients, if they have short-term cash needs, to pull those out. We don't want to leave them in a volatile market, but it's so hard to time the market. And we have found over the years, it's best to remain invested. So we did show several charts of, trying to time the market and how hard it is. And if you remain invested, you generally come out ahead. And we even did an analysis of if you miss the 10 best days and the differential on your return. And I think it'd be up 7.5% over the last 20 years had you remained invested. But if you'd missed the 10 best days, you would have lost 2 percentage points in returns. So our messaging to our clients is remain invested at this point. We just haven't made any changes to our long-term strategic asset allocation recommendations either.
That's right. The committee did have some discussions and has been having some discussions about a neutral weighting. So maybe you could just share quickly about that.
Right. So over the last 10 or 15 years, the U.S. stocks have just significantly outperformed international equities, but we still have an international equity weighting. And the committee's always asking us, is this weighting correct? And the neutral weighting for the all-country world index based on capitalization is about 65% U.S. and the rest is non-U.S., whereas the foundation is slightly underweight U.S. stocks on an all-country world basis. And that really helped in the first quarter. So the underweight to U.S. and internationals did significantly well. It was almost an 8 or 10 percentage point difference between the S&P 500 and internationals. So the committee talked. We had a capital markets team member on. We had a lot of discussion about the strategic, should we move dynamically? And at the end of it, the committee at this point is remaining slightly underweight US, partly due to the volatility and the still high valuations.
Thank you. Yes. So again, the committee had some great discussions. They will continue having discussions at every meeting. But we wanted to be able to provide you a quick update of what we talked about and hope you find this helpful. If you have any questions about your charitable fund, please feel free to reach out to our team. Your primary relationship managers are always available for you, and our finance team is here to help if you have questions about investments. Thank you.